heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, full market coverage ahead. Of course, the largest US maker of chip-making machinery fails to impress investors. What does it say around the rest of the chip sector? We talk applied materials.
Plus, OpenAI and Reddit announce a partnership to bring its content to ChatGPT and other new products. Details ahead.
And we sit down with the CEO of cloud computing company CoreWeave as it secures $7.5 billion in private debt. All that and so much more coming up. First, let's check in on a market that has been ramping higher for 4 straight weeks, the longest winning streak we see for the S&P and indeed the Nasdaq in, well, at least since February. We're actually seeing the best month so far for the entire year, and we're seeing, again, just tentative gains. We've cooled some of those gains as the week has progressed, but nevertheless, still up almost 10 points on the Nasdaq. Stock 600 over in Europe, less optimism on the day. We're off by 0.1%, but again, we've seen gains throughout the course of the week. And look, we're still near or at record highs for a lot of these benchmarks. Looking at 10-year yield, actually just selling off a little bit. Bond yields just pushing up somewhat. But this has been a reassessment of the Federal Reserve and whether we can still see cuts coming in for this year. And some of that data just showed a healthy cooling of the US economy. Move on, have a look at what's happened over the last 5 days, and we're looking at crypto. And look, on the up and up, more than 9%. We're at 66,807. Look, way off our highs there, Ed, but still notable risk on sentiment throughout this week when it comes to crypto. What have you got on the micro?
Well, let's start with Reddit. And Reddit is up a lot, flirting with a record high, around 14%. Since its IPO, which you know was in March. So the deal with OpenAI is kind of a two-way deal. OpenAI basically licenses Reddit forum posts to get that text data to train models, but it can also show Reddit posts in the consumer-facing products. And what does Reddit get out of it? Well, according to analysts, like $40 million of high-margin revenue every year, which is great. But also, they are talking about building AI products into the forum on top of OpenAI's large language models. Let's talk about that later in the show. The other name we're talking about is in the chip space, Applied Materials. As you point out, the story here is about a company that makes the machines that makes the chips. It sells to the contract manufacturers like TSMC. Higher 0.3%. It beat estimates, but at the upper range of the estimates that were given by the street, it fell a little short. The question is, where are we at in chip demand?
Yeah.
Through the proxy of the companies that buy the machines that make the chips. What a fun story.
It is, because ultimately, is this a bellwether? Is this some sort of ability for us to have a bird's eye perspective? Where's hot, where's not? Maybe not in autos, maybe not in connected devices, but certainly all things AI still driving us. And what about the China exposure, Ed? I'm pleased to say we can go broadly across the sector with Advisors Capital Management Partner and Portfolio Manager Joanne Feeney. Always a joy to have you with us, Joanne. And look, this is a chip equipment company, but what are you seeing in terms of where we are in chips more broadly right now?
Yeah, good morning, guys. Applied Materials results better than expected, but their guidance was a little bit soft. And in this kind of an economy, this kind of a market, that doesn't go over too well. But when you look into what Applied said, they indicated continued strong demand from several of their end markets, except for China. Obviously, with U.S. trade policy really trying to crack down on exports that would enable China to have its own leading-edge chip business, Applied Materials finds itself in the crosshair, no surprise. And so that part of their business is going to fall off pretty sharply. But what we're seeing is that global demand for equipment, because of the global demand for high-end chips, for AI and other things, is still going to remain robust for many years to come.
That's really interesting. So, Joanne, on Monday, I'm going to speak in a conversation with Jensen Huang, Michael Dell, and Bill McDermott for 25 minutes. And what I'm trying to get out of it is this idea of when do we move beyond AI as a market, AI accelerators just being the hyperscalers? So think about what you just said in demand. But as far as I see, that's the only place it's going, and it's largely in the US. What's your kind of counter to that?
Well, what we're seeing, I believe, is there's a demand beyond just the U.S. hyperscalers for other entities to have their own AI training and inference capabilities, notably countries that want to keep their data private. And so we're going to see entities there develop the infrastructure to run those models and to deploy those models. So, Jensen has mentioned that in the past. You could try to get some numbers out of him for how big that is currently and how big he expects it to be, because it should be the case that once the hyperscalers build up their capabilities for training and for inference, that we'll see that other end, the sovereign investments or even company-specific investments, where, again, data is likely to be kept private, become the next buyer.
You know what's so interesting, and maybe I'm getting a bit in the weeds here, but think about Dell's history. They're really good at selling to SMEs and governments. They're great sales channels that maybe Nvidia has never really operated in. And that's the bit I'm trying to scratch away at. Everyone else in the world who wants a part of the AI story, how do they actually do it, right, from their CapEx spend? And where do you, Joanne Feeney, position yourself if you think that they're going to get there?
Right. So the others that are going to do it, they're going to have to build the infrastructure, Ed, if I understand your question correctly. And so whether it's through a Dell or a Supermicro or an HP or an IBM, right, they're going to have to bring the hardware in, which will be powered by chips from Nvidia and in the future AMD and perhaps in the future from some of these startups we're hearing about. And how we position is we look at the fundamental suppliers that make it all possible, which are the chip guys. Nvidia, AMD, Broadcom, working in conjunction with Alphabet and others to bring chips capable of this high-end computing. That's kind of a clean way to invest, but also then on the application side, companies that are rolling out capabilities to deploy AI, like a ServiceNow is one example. But it's broader than that. It's beyond the technology sector. It's into industrials. It's into healthcare. So you really have to dig deep to find those individual companies that are being successful at this early stage in starting to deploy the AI capabilities that are just emerging.
I'm loving this entire show because we're going to, in many ways, pick away at all these different ways of telling the story. We've got CoreWeave coming on, of course, one of these new hyperscale entrants almost, offering new data center footprints that's going to be closer to the companies that need the access to the compute. You're then also going to be discussing this new AI push towards regulation, but ultimately standards and investment coming from the US government. We just had Chuck Schumer, of course, write that key AI thought leadership piece. Basically, there's no real regulation in it yet, but we're delving into that. But all of this very much focuses on the US and at bits China and the worry there. But what about Europe? What about Japan? What about other areas that you can invest geographically, Joanne?
Yeah, I mean, obviously one of the big trends that's ongoing that's related to this space is the desire for, let's call it self-sufficiency regionally, to have, for countries and regions like the US and Europe, to have their own capability to manufacture those high-end chips. Whether regulation and how regulation evolves over time is a really hard thing to sort out at this point. And so we don't try to make bets based on regulation changes. It's just sort of too early to know what Chuck Schumer's and that bipartisan group's proposals will actually mean. So instead, again, what we can do is look at how the subsidies are evolving and how the tariff barriers and restrictions are evolving to push the manufacturing of advanced semiconductors around the world. And what it means, right, is we're going to get more chip manufacturing, which is good for the equipment suppliers, by the way. And probably get some cheaper chips as a result of a bit of overcapacity over time.
When you therefore look at some of the startups coming in, when you think about where to allocate to where's already done well, is Nvidia, ahead of its earnings next week, still at the right valuation point to enter?
Well, a company like Nvidia has many years of growth ahead of it, and its valuation reflects the expectations about how high that growth will be and for how long it can be maintained. And right now, Nvidia, with its chip technology, is well ahead of competition. Yes, AMD is coming along, and they will definitely have a good chip in the race. And we talked about Broadcom with their teaming up with Google and others. But ultimately, Nvidia has not only the hardware, the most advanced chips with the most capability for training AI, but it also has the software that is needed to make all of that work, that CUDA software that it's been developing over decades. So it really does give Nvidia a substantial and defensible lead for several years to come. That doesn't mean that we're not going to get news flow that disturbs those long-term forecasts, and that could cause disruptions in the stock price. And that's why we think for Nvidia to be held by clients in our growth portfolio, it's a substantial position. But in our balance strategy, where clients have perhaps a more conservative view on what their portfolios need to do over time, it's a smaller position because of the volatility that we're likely to see as expectations can be disrupted at any time.
Joanne Feeney, how are you and Advisors Capital using AI at home and at work?
Well, I know from talking to the marketing guys, for example, that they're using AI to create, we just had a conference, for example, they created a lot of the background material for the conference, the images. I worked with a colleague recently to do a podcast on behavioral finance, and he generated notes using AI, questioning, hey, what did Danny Kahneman contribute? And so I saw all these great notes. I'm like, wow, it's impressive. He said he did it in 15 minutes. So it's an incredible time saver for folks quickly needing to generate content or get quick answers to questions and to generate images for marketing materials.
Joanne Feeney, Advisors Capital Management, great to have you back on the show. Thank you so much. Now, coming up on Bloomberg Technology, we have all the details on that OpenAI and Reddit relationship and a new partnership. Stay with us. We will be right back. This is Bloomberg Technology. So OpenAI unveiled a partnership with Reddit that will bring the social network's content to ChatGPT and other products, but also allow Reddit to add new AI features to its online communities. Let's bring in Bloomberg's Shireen Ghaffari for more. A bit of a scramble last night because the market reacted, right? Reddit shares now really high. Just give us the basics of the deal in both directions.
Sure. So OpenAI, which has kind of an insatiable desire for data, right, to train its models and to just show data within its ChatGPT app, will now have access to Reddit posts. And that's going to happen through the Reddit API. So, whatever people post on Reddit, OpenAI now has the legal right through this deal to actually use that in its products and to train its products. On Reddit's side, they are presumably getting some kind of financial benefit from this, although the terms of the deal have not been disclosed.
Also, perhaps they fold in OpenAI's own large language model and AI applications within the use of Reddit. It seems as though there's going to be advertising involved. And the question to me, Shireen, is what do they get that's different versus the Google agreement? We know the amount of money, it seems, that they got from Alphabet already. But why, therefore, so embed OpenAI from an actual AI architecture perspective and not Google's?
I think that these media companies, social media companies, publishers, they're kind of looking to just get the most value that they can out of the data that they have, right? So I think the deals are very similar. I think, we just have a little bit more information about how much the value of that Google deal was. On the advertising front, because there was a mention in there in their release, I actually clarified with OpenAI. So all that means is that OpenAI is actually going to place ads on Reddit as part of the deal. So we're not seeing a kind of deeper ad integration that some may have thought.
Really fascinating. And I think also we've got to remember the history of Reddit and Sam Altman, even though it says really that it was Brad Lightcap that forged this deal, certainly as one of the key investors in Reddit at the IPO. Those ties go deep, and the fact that he was interim CEO for a short while. Bloomberg, Shireen Ghaffari, we thank you so much for talking us through the latest deal. Meanwhile, let's talk about the space race that's upon us, because we're just taking a look at Elon Musk's Starlink. It's launched frenzied competition for space dominance. Just take a listen.
The largest single constellation of satellites orbiting our planet is run by a mercurial individual who needs no introduction. It's this guy. It achieves this by maintaining a vast relay network in low Earth orbit. That's the area higher than a jetliner, but below a GPS satellite.
Right now, Starlink has more than 5,600 satellites in orbit.
And it accomplished all this in less time than it took James Cameron to make a second Avatar movie.
At one point, SpaceX envisioned launching up to 42,000 satellites.
But this speed and relative success has raised eyebrows. Concerned ones in government, and excited ones in the boardrooms of potential rivals.
It's essentially a company trying to disrupt a somewhat complacent marketplace.
So you can catch the full thing from Bloomberg Originals at Bloomberg.com. It's a must kind of watch. And the speed and relative success of Elon Musk's Starlink has encouraged the deep-pocketed rivals like Amazon co-founder Jeff Bezos and his Blue Origin, which is actually slated to resume space tourist flights this Sunday after it stopped crewed operations 2 years ago following a mid-flight mishap. I want to go out to Chicago and Bloomberg's Kyle Porter. Let's start with the Starlink doc, right? That was 1 minute, but it's a longer thing. Tell us about the other items that you covered off in it.
Well, thank you for having me on, Ed. We cover quite a bit of ground in those 7 minutes. We look into how the service performs, Elon's plans for growth of the service, potential rivals, and, as that 1 minute alluded to, difficulties geopolitical and technical with the service.
Let's talk about technical difficulties, because there's been a few launches that have been delayed of late. We're also anticipating the relaunch, or, well, certain regalvanization of Blue Origin this weekend. Things have been stop-start.
They certainly have a little bit, and Elon's been a little bit frustrated in his getting approvals to build out the size of the network that he wants. Starlink's biggest problem is getting satellites in the air. Doing things in low Earth orbit is fantastic, and it decreases the latency, which is the time it takes for the signal to get back and down to your dish. However, you really need to think of it like filling up a bath. You need an awful lot more satellites in the air to stop your service slowing down. And
right.
Frankly, they're not doing it as quickly as they'd like.
Kyle, my understanding is you and I are under orders to be awake very early this Sunday because Blue Origin will try to launch its tourism offering again after 2 years. Just give us the basics of that mission.
Yes, well, you'll be up earlier than I am, thank goodness. The plan is, after 2022, there was a mishap on, thankfully, an unmanned flight, which saw Blue Origin ground its flights. This will mark the resumption, I believe it's the 7th flight to carry a crew. And it's also going to include someone rather special, Ed Dwight, who was part of the original NASA program, would have been the first African-American in space had he been picked.
And then, not to mention what happens early next week, Boeing's first crewed space flight, maybe, just maybe, using its Starliner craft. That's been delayed a little bit. Maybe it'll come on May 21st. There is a lot going on in space, as always. Bloomberg's Kyle Porter helping us tell that story. And I hope you both don't have to get up too early Sunday. Meanwhile, coming up, after a volatile week of trading, the meme stock rally coming back down to earth. I could have used all the puns about to the moon, but I won't. We will bring you the latest next. This is Bloomberg Technology.
It is time for Talking Tech. These are some of the other stories we're following in the news. First up, Snowflake is in talks to acquire startup Reka AI for more than $1 billion. That's according to sources. Reka AI is a producer of large language models and would enable software maker Snowflake to offer generative AI capabilities. Reka AI was founded in 2022 and was valued at $300 million in a 2023 investment round. Plus, Ingram Micro is preparing to move ahead with plans for an IPO that could raise more than $1 billion. That also, according to sources who say Ingram's considering seeking a valuation of as much as $10 billion. The company's been working with Goldman Sachs and Morgan Stanley on the listing and is said to have added JP Morgan to its list of advisors. And Microsoft avoids a UK antitrust probe for its partnership with Mistral AI. Last month, the UK Competition and Markets Authority announced that it was gathering information on whether the two companies threatened competition in the UK. The watchdog group reversed that decision, saying Microsoft does not have the ability to, quote, materially influence Mistral's commercial policy. Caroline.
Let's just go back to what was quite the frenzy at the start of the weekend. All the meme stocks. But now that's come to a bit of an abrupt halt. GameStop, as you see, now only up 16%. Shares falling for a third consecutive day, in fact, as the company pre-announced earnings said it may sell up to 45 million shares. Let's break it all down. Bloomberg's Bailey Lipschultz. And the point here is that we had GameStop and AMC really soaring at the beginning of the week. AMC made the most of it. Now GameStop's trying to make the most of it.
Exactly. AMC happened to have that at-the-market offering in the works before, so they were able to capitalize on that, raise about $125 million through sales of new shares. They also then announced a debt-for-equity swap, so diluting investors, but trying to shore up the fact that they had, at least at the beginning of the week, north of $4.5 billion in debt. Now GameStop to be fair, doesn't really have debt. They don't need the cash. But when I talk to market watchers, they basically said there are 2 times you sell shares. One when you're stupid not to, and one when you need cash. And it does seem like GameStop trying to move to capitalize on the rally. But as you mentioned, not only up 17% this week, not up the 270% it was at the start of the week on Tuesday.
And we got a little bit of fundamental news, unlike what has driven this meme stock rally. And they pre-announced their earnings. How did they fare? I mean, it looks as though revenues are under pressure.
Under pressure, missed what Wall Street had penciled in, but there are only
How many?
I would say there are 2 analysts who follow it, so it's not really like we can say there are dozens of analysts who kind of are sharpening their pencils to come up with what they should be reporting. But it is slowing. They are focused really on getting back to profitability. So the net loss was more narrow in the last 3 months than it was this time last year. But still, fundamentally, there are pressures. There's they need a new game cycle. They need a new console cycle. They are also battling with the fact that people download games and don't go to stores. And that's really been the bear case for GameStop, even well before 2021's craze.
Bailey, hello. Happy Friday. I was talking to somebody interesting last night. Let's call them a market participant. And I asked about Roaring Kitty. And I was like, has anyone yet worked out what Roaring Kitty was trying to communicate through social media? And this person, again, let's call them a market participant, was like, do we even know that it is Roaring Kitty?
We don't. And that's why it's scary, because we haven't seen the person who operates under the moniker Roaring Kitty, Keith Gill, hasn't been on social media. He used to be streaming on YouTube and different means back in 2021 and 2020. He hasn't physically appeared, so the X handle is back to posting a number of videos. But to your point, no one's been able to confirm or talk to Gill himself to see if he actually has resurfaced after almost 3 years of being away from social media, or to read between the lines that what your source is pointing at. It could be other actors, but no one really knows.
What is interesting is that loads of people tried to play the game this week, right? People have taken to social media and said, oh, look, I made a small amount of money by buying or selling GameStop or AMC shares. Is there any sense that there was something bigger than that, beyond just retail traders playing the moment?
Well, we wrote about this throughout the week, and when you look at the trading flows on the likes of a Fidelity or an Interactive Brokers, it's a very small portion compared to what we saw in 2021. And if you look at Fidelity's platform, over the past week, the number of buy and sell orders has basically been matched. So when you look at the hundreds of millions of shares that have traded for GameStop and the north of 1 billion shares in AMC that have traded, the underlying factors would point towards this likely being some form of momentum or quantitative funds trading in it.
Bloomberg's Bailey Lipschultz. What a week it's been for you. Yeah. Thank you. Now, coming up on the show, cloud computing company CoreWeave receives $7.5 billion in private debt. We're going to speak to the CEO next. Stay with us because we'll be right back. This is Bloomberg. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
Caroline Hyde in New York. Let's get a quick check on these markets because it has been a week. And it's been a macro-fueled week in many ways. Some of the data points shining a light that maybe the Fed can still cut. We've got, therefore, benchmarks near or at record highs. They certainly have been for the NASDAQ 100, the NASDAQ, the S&P 500, of course, the Dow hitting more than 40,000. We're just wavering on the day as perhaps we just trade into this weekend and take a little bit of profit. But Stock 600, not as strong a week, up less than a percentage point, but still up for 2 straight weeks and still near a record high as well. Remember, we've had 4 straight weeks on the US benchmarks. It's the longest winning streak that we've seen since February. I'm looking at Bitcoin up 3.25%. It's having a good week too. And we're currently up at 67,000. Move on and have a look at what's happening in terms of individual names that are on the move. And notably, Take-Two is actually one of the best performers on the NASDAQ 100. Gaming company coming out and saying, sorry, we're delaying it again, the latest Grand Theft Auto, but at least we're getting a timetable a little bit more resolutely, and so investors seem to be in a forgiving mood, when maybe some of the numbers did have to be dialed back more broadly for this fiscal year's revenue because of the delay to the start of 2025. PDD, I'm looking at, of course, Temu, UBS upgrading their stock, saying that, look, we're all over-exaggerating the limitations of Temu into geographical diversity on the back of geopolitical threats. In fact, they think that there's still going to be a winning formula. PDD get their numbers on the 22nd of May. Who else gives us their numbers next week? Nvidia. We're currently down by 0.8%. But Ed, what are we looking at in terms of the world of AI?
Well, a name that's very closely tied to Nvidia in one of the largest private financings to date. Cloud computing company CoreWeave has received a $7.5 billion debt package led by Blackstone, Magnetar, and Cotu. I'm pleased to say we're joined now by the CoreWeave CEO, Michael Intranter. Okay, let me frame it this way. $7.5 billion is a lot of debt financing. It's a very large number. You are an unusual company because you're doing something with pace, but very closely tied to Nvidia. So I think our audience would appreciate that you just kind of explain how you got the debt financing and how it's structured, because the cast of characters in there are also unusual.
Yeah, so first of all, thank you for having me back on again. I appreciate the opportunity to speak with you and your audience. This is a very exciting financing for us, and it follows very closely on the coattails of a $1.1 billion equity round that we completed last week. And so it's been a very, very active period of time for CoreWeave in the capital markets. The syndicate of lenders, which is really a who's who of private lending, including, as you said, Blackstone, Magnetar, Cotu, but you also have Carlyle, CDPQ, Digital Bridge, BlackRock, Eldridge, really wonderful names, really great supporters that have a deep understanding of the business and, really provide in coordination with the equity round that closed last week, and a deep validation for the solution that we are delivering to the market, our approach to building, AI cloud infrastructure. And so it's been really a wonderful few weeks here for the company as we really push towards enormous scale.
I mean, this is a big pot of money. As you referenced, $1.1 billion equity funding just done 2 weeks ago. You've now got the $7.5 billion more of debt put to work, and it's about infrastructure. It seems to be the fact that you want to be doubling your footprint when it comes to data centers. You've already expanded into London, outside of the US. You've also got to be buying those chips and the infrastructure. So where will you put the data centers first and foremost, Michael?
Sure. So a couple of things. One is that in total, over the past 12 months, we've raised $12 billion into CoreWeave. And that is representative of an incredibly capital-intensive build-out of infrastructure, initially across the United States. But now, as you said, we're pushing into Europe. We've got 2 data centers that we're building in London. We've got a footprint in Spain. We'll be up in the Nordics. In total, we'll have 28 data centers by the end of this year that we will be providing our clients infrastructure from. We tried to build our data centers proximate to population centers. Think of it like as the NFL strategy. In terms of trying to put our data centers so that they are relatively low latency providers of infrastructure. But, as I said, our footprint is getting much larger very quickly. And, this pool of capital here, the $7.5 billion, is really focused on the physical infrastructure that we have to build in order to deliver our products to our clients.
Michael, I think a lot of people are really starting to become concerned, or at least inquisitive, about energy and power consumption. Have you a clear strategy for energy and power sourcing in all the geographies you've just outlined?
Yeah, we do, and it's a work in progress. The rate at which we're scaling, we are continually addressing that. My background is actually from energy, and that's where I grew up. And prior to that, I really focused on environmental commodities, and so it's something that's near and dear to me. It's near and dear to the company. We have an entire team internal to the company that are building a strategy we'll have in place by 2030 as we go through this ramp. And so, we understand that there is a moral imperative to take responsibility for the energy that is required to be able to deliver this type of resource to the world.
So what is it? Is it nuclear? Is it just having to be more efficient with what you've got, go for more power efficient chips?
Yeah, so the answer is like so many things around energy, is it's a combination of a number of things, right? So A great example is in the next iteration of our technology build, we'll be moving from air-cooled data centers into liquid-cooled data centers, and the savings that are associated with liquid-cooled provide, maybe 30% more energy efficiency within the data center, because you don't have to run all the air fans, you don't have to move so much cooling through it. It's just more efficient, and so there'll be a significant step function that you will be able to achieve by just evolving the technology into the most modern, energy efficient component. The other thing to think about is from a computational perspective, the hardware that is being delivered right now is enormously more energy efficient per flop than it has ever been in the past.
I know somebody that will make that argument next week. On Monday, I'm going to speak to Jensen Huang, Michael Dell, and Bill McDermott all at the same time. The success of those companies, Michael, to which one is your fate most closely tied?
So look, we have a wonderful partnership with Nvidia. They are absolutely at the epicenter of anyone's approach to building out the physical infrastructure for serving the AI markets. That is a reality of where we are right now, and will be for quite a while. Michael Dell Dell's an extremely important partner of ours. We require them to be able to build the infrastructure that incorporates the GPUs that we use. And so, we are working with many partners across the space.
Are you too dependent, Michael, though? Are you too dependent on Nvidia?
So the world is dependent on Nvidia at this juncture. Their technology is defining the space. And so we work with them because our clients demand the technology that they drive and deliver into the market.
Not AMD? Not any others?
So we look at all different types of silicon. We look at all different types of solutions. But our clients have clearly indicated that for the time being, the type of silicon that they require to build their products, to build the artificial intelligence that's changing the world, is currently being driven in large part by the Nvidia infrastructure.
Well, the share price reflects that. CoreWeave CEO Michael Intrator, thanks so much for coming on to talk about your own funding. Meanwhile, coming up, we're going to be hearing from the Salesforce CEO Mark Benioff about the future of artificial intelligence. Who'd have thought it? This is Bloomberg Technology.
In an exclusive interview with Bloomberg, Salesforce CEO Mark Benioff spoke to us about working with activist investors, competition with ServiceNow, and his outlook for the future of artificial intelligence. Listen to this.
I think I might be one of the few CEOs that actually really enjoyed working with these activist investors. I had never heard so many great new ideas in my career, including such out-of-the-box thinking. And look, we were able to really transform and evolve Salesforce over the last year, and you can see it with our incredible financial results that we had last year, and our idea that we're able to continue to move forward with these incredible new characteristics of our company. In our last earnings result, we even talked about that we've started to create a dividend. That's something that was beyond my imagination even just a few years ago. So it's exciting to be the #1 CRM, to help companies connect with their customers in a whole new way. Right now, we're about to enter an incredible new world, which is the world of artificial intelligence and how it's going to transform these customer relationships. And I think we're about to see some technology that we never thought we'd see in our lifetimes. We're going to see just some incredible new ways to run our businesses.
Competition in CRM is fierce, Mark. You've got ServiceNow trying to poach a bunch of Salesforce employees. I believe they stopped using Slack after you bought it. They're trying to build more of a consumer brand. They started their own Trailblazer program. Are they trying to pick a fight with you?
Well, they're an interesting company. You know, I just think they need to be careful. They might be getting a little ahead of their skis. We just replaced them at Disney. Of course, we already had run Disney stores and Disney guides in the park, and we had done a lot of things with Disney with their customer relationships. But I think everybody knows that when they went to have Disney Plus and wanted to have a call center, and they chose that company, well, unfortunately, Salesforce had to come in and rescue the entire operation and rebuild all of the customer success and call centers for Disney, and which was at that point had been called out as a marquee customer there as well. Salesforce is actually a tremendous company that does real customer success and delivers solutions in sales, service, marketing for so many great companies around the world now. You know, obviously standardized at Disney, but for so many other great organizations, banks, insurance companies all over the world, and I think we're doing pretty well on our own.
Fighting talk coming from the Salesforce CEO, Mark Benioff, as if you expect anything less. Meanwhile, the Senate's bipartisan AI working group finally released its AI roadmap this week. But it's getting some mixed reactions from civil groups, for example, who fear that the industry is playing an outsized role in shaping this legislation. Let's dig deeper with all of it. Linda Moore is with us, President and CEO of TechNet, which represents a bipartisan network of innovation economy CEOs, senior executives like the OpenAIs of this world. And Linda, I can imagine that thus far what's being said, the $32 billion of investment coming for AI, the focus on innovation is music to your ears. But are you listening to what the civil side of the equation is and the fact that they feel that regulation and guardrails aren't coming soon enough?
Yes, I understand. And they were involved in all of the AI Insight forums that were held in the U.S. Senate. And I'm sure their voices will still be heard as we go through the process. You know, one thing that I think that they need to understand and the public should understand is last summer, these big AI companies in America made voluntary commitments with the White House to secure the systems, to mitigate bias, all the risks and harms that can be anticipated. And they also went beyond that to make their own internal evaluations on all the risk mitigation that needed to be done. This will go through a committee process in the U.S. Senate and also in the House, and everyone's voice will be heard, including civil society. And our companies, the tech companies in the U.S., are working very closely with them and want to address all their concerns.
Apologies for the sneeze to our Bloomberg Technology audience around the world. It's allergies season, but I've recently discovered Flonase. Other products are available. Linda, Caroline summed it up perfectly earlier when we were talking about Chuck Schumer. There's a lot of speak coming out of D.C., but it's basically thought leadership. It's not substantive codified rules or way forward with AI. When do we start seeing some concrete action?
Well, we already saw concrete action just this week. On Wednesday, the Senate Rules Committee passed 3 bills related to the use of AI in elections. 18 states have already done that. And there will be another hearing on AI policy next week in the U.S. Senate. So I expect some of this to move pretty quickly. There are other committees that will take a little bit more time, but I think you'll see pretty expeditious action here in the next few months. I can't say that every single part of AI policy that's reflected in the roadmap will be addressed, but I think that they'll make good progress in the next few months. I've been really pleased to see that AI is an area of great curiosity and cooperation across the aisle. We see such a partisanship in D.C. right now, and that's not the case with AI policy. We see people working together, and that's really great to see.
TechNet President, CEO Linda Moore, we really appreciate your perspective and analysis. Thank you so much. Now, coming up on Bloomberg Technology, we're going to be joined by the CEO of VSCO. Remember VSCO? The company reached 200 million. Well, exactly. It reached 200 million users worldwide. Talk about photos. Talk about their turnaround. That's coming up next. This is Bloomberg. VSCO, a platform for photographers and visual storytellers, just announced first-time profitability under its new leadership, but it's also amassed 200 million users worldwide. I want to dig into that with VSCO CEO Eric Whitman, joining me here on set in San Francisco. So our producer, John Hyland, was reflecting that, like, in the early days of VSCO, part of it was the technology offering, right? Specific filters, photo editing and imaging. 200 million users is a lot. The question is how they're using it. Are they paying users? Where are they? And principally, what are they using it for?
Yeah, great question, Ed. Thanks for having me on again, too. I think VSCO has had a very long journey. It's been around for 10 years, and we've seen multiple versions of the company. It's really started by creators for creators, so these were photographers, ad agency folks who were really trying to support more people like them. And for a lot of these users, right, they come to VSCO for the tools, for the looks. They come because they're trying to get a certain look, and VSCO is a really easy way for them to do that. What we find, though, is people come for the tools, and they end up staying for this really healthy, creative community where people can get to meet other people, get inspired by their work, collaborate on other projects. And that's what we're finding is where VSCO is really sticking for a lot of folks. And as we've been making our transition more as a business to support more of those serious creators like photographers, they're staying around for more of that.
Of those 200 million, how many of them are a paying customer or subscriber in some form?
Yeah, so our business model is primarily subscription, primarily membership. So it's a fraction of that 200 million. And where we're seeing most of our growth is actually with the professional tier, which we just introduced a year ago.
Okay, and I'm assuming with the professional is more opportunity not only to be seeing business done between brands and photographers, but also you taking yet further opportunity to boost revenue. How do you do that?
Yeah, I mean, first is really spending some time listening to our customers. And what we're finding with a lot of them, especially pro photographers, is it's increasingly difficult for them to promote themselves, to find work, to be discovered by brands or other potential clients. And especially with traditional social media and the algorithms changing, where it's becoming increasingly harder for those people to be discovered there, what VSCO is doing is we're providing a great way for these people to create and express that creative identity and then be discovered by other people. And in our recent introduction of VSCO Hub, this is a very smart and powerful AI-driven engine that allows people to get discovered by brands and other potential people who want to hire them.
Where are you, Eric, though, in terms of those 200 million? How many are actually just people in Gen Z, millennial, wanting a different type of social media? That's how you initially catalyzed growth. You were an alternative where you didn't want to be garnering just likes and the anxiety that came with that. Do you benefit from the backlash that we can still see and the push out potentially of TikTok?
Yeah, I still think that there's a lot of people who come to VSCO because they want that safe place to engage and connect with other people. We get over 1 million signups a month organically. We don't do any paid advertising. And this is something that I think many people come to VSCO for. However, that's not our focus. We do find that a lot of Gen Z who want to increasingly become professional creators or professional photographers themselves, they come because
Just really quick, Eric. So
yeah.
I think there's a lot of skepticism about 200 million. So VSCO users, 200 million of you around the world, whichever camera I'm looking at. If you are a VSCO user, contact us. I'd like to hear from you. Yeah. Karen mentioned TikTok and 1 million on board a month. Are you onboarding from anywhere specifically?
It's organic. I mean, a lot of people are just
but they've got to be coming from somewhere. It's a battle for eyeballs.
Yeah, the biggest place we're finding these customers is actually coming from Instagram. So that's our biggest referral source is people who are coming over from Instagram. Second is people just finding VSCO on the web. They're looking for alternatives. They're looking for places where they can express themselves creatively in a healthy and authentic way. And VSCO is that place.
Fascinating. VSCO CEO Eric Whitman on being EBITDA positive, on 1 million people adopting your platform every single month. We thank you for talking us through where they're coming from. Now, that does it from this edition of Bloomberg Technology. And what a week it has been. And we brace ourselves for an amazing conversation come Monday, Ed.
Yeah, just incredible week. Earnings, AI, it all continues. And it does continue Monday. Thank you. I'm having this big conversation with Jensen Huang and Michael Dell. Recap today, though. We covered a lot of ground. You know where to find the pod. Thank you to everyone that tunes in. And thank you to those that listen to the podcast. That's where you can see it and hear it. This is Bloomberg.